Options Center. It's a weekend edition. Hope everybody had a wonderful holiday. Happy Thanksgiving, Merry Christmas, and everything else that you celebrate. So I especially want to thank all those that help support me on Twitter, Instagram, Patreon, Facebook, YouTube, all of those platforms. And if you're not part of the Patreon, you don't have to join just for the trade education or all the things that come with it, trade ideas and things. If you want to just donate and appreciate all the information that's put out in those platforms, throw in $5. It's only $5 a month if you'd like to join that. So thank you guys. Just wanted to throw that in there, and I appreciate you. So let's jump in to the charts. We have lots to go through. We're going to go through SPX on the monthly, weekly, daily, 65. Check out all of them and layer on a bunch of technical analysis, Elliott waves, all those things, and then we'll go check out the VIX, SPY, the volume, and the options expiration, or expected move for the week coming up. If you're a patron, you stick around, and we have a lot to go through. It's going to be a pretty long video, so we can get some education going. And if you're not, think about joining. Okay, here we go. And don't forget, go down the bottom right hand corner, hit that Option Center logo, and subscribe. Here we are on SPX, the monthly. I drew this channel. I reshaped it for those who have followed, just so I could touch the top here. 1, 2, multiple times. And then finally up here. It fits. It makes sense to me for the top of the channel. And we're pushing off of that channel right now. I know that a lot of people talk about technical analysis. You can move things around, but as long as it's tagging other spots, this fits perfectly. So we're pushing off the top of the channel. We are still in a bullish posture. We're above all MAs, we're still above in the MACD, the RSI. We have divergence. We made a brand new divergence. But the only thing we really want to point out on this chart is that candle. The month is about to end for November on Tuesday. And this candle, if it comes down anymore, or if it continues to look like this, then we may have an issue. So this is just one example. It doesn't have to end like the Corona crash. We're not talking like that. Possible, but not likely. We're not looking for that. But it is a reversal candle. And you noticed on the, we actually made new highs for the Corona crash before actually going down. But this is a clear signal, if we close like this on the monthly, that we are making some sort of reversal, and on the long term, and we're possibly trending to the downside at this point. And we'll have to change our mind frame into a bearish, whether it's going into a bearish market or just making a nice correction. So all right, let's move on to the weekly time frame. Pushing up on the top of the channel here as well. We're still above the trend line. And technically, we're in a bullish posture. We closed right on the 8 EMA, and we're above all the other MAs and trends. So yes, we have a reversal candle with a bearish engulfing candle here. But no other sign. I mean, technically we're still on the weekly in an uptrend. So we have to keep that in mind when we're thinking about this reversal, that it's possible we can move back to the upside, but it's likely that we're making our reverse now. So we'll have to watch this trends very closely in the weekly. So right now we're in the primary wave 5. We think this is the last of the waves. And I do want to show you real quick on the monthly that there is a super bearish, a very bearish count here, to where this is actually the end of this move. So if this say 1, 2, 3, 4 Elliott wave, move 5, and that's the top of the channel, that's it. and then we make our correction, or maybe this was a very large wave 1, bear market wave 2, and then we start our cycle back over to the upside. So that's, that's a possibility. I'm not quite ready for that yet, but just keep that in mind if we do start breaking levels, especially like this megaphone pivot here. So here's a closer look on the intermediate wave 1, 2. I think we're still in, we went to wave 3. I think we're still in wave 4 correction, where we're coming down for an A, expanded B, and a expanded C. So that's what I'm looking at, but we're not going to project. We're going to take a sharp look at price action before we can confirm those type of moves. So excuse me 1 second. Get a little bit more coffee. Okay, going down to the daily trend is our friend. So as we ended up here, I have a megaphone pattern here, which would coincide with the expanded flat correction that I think we're in with intermediate wave 3 ending. We have our, in the yellow, wave A, so 3-wave move down. B, it looks like a 5-wave move up, but we actually have a 3-wave move here. We have a small move here for a higher low. So this would be our A, B, C, very distorted, and then a wave C down here, which would be a 5-wave move down. So that's a huge move, possibly down to the bottom of the channel, or this pivot in the lower 4,000s. So yes, we've had a big move the last couple days, but we're really looking for some acceleration at this point. That was a large candle, but we're looking for more. So on here on the daily, just getting a little closer, we had this this resistance up here, and it was apparent that it was a ascending triangle. We got above it, but couldn't close there. So that's a very important fake break there to draw the bulls in, and then quickly reverse to the downside. It came down to the 8 EMA, regained it, and could not retest the highs there, could not make new highs right at that resistance again. So this was a big area around that 47.11 area. And then after that, we just dropped and started accelerating. Gap down from the 8 EMA, lost that. The 20 EMA, the 20-day moving average, lost that. So now we're actually looking for that 50. So we want to see what happens around this trend line plus this former all-time high. That's going to be very telling at the 45.45 area to see what happens. We might actually poke through and then start moving up. Maybe for a bounce, we may slice right through it. So we have to see what happens. We have to play what the market gives us. And, I wouldn't be surprised if with this megaphone pattern that we just really cut through a lot of this stuff, pausing for a day and then a slight bounce, but then gapping back down and things like that, shenanigans. You just have to think that we're headed down until we prove otherwise. So watch that 8 EMA. We'll be doing this. Hit that notification button if you want to receive updates very, very often, and we'll keep you updated on the market. Now, it's so important for these market updates for you to pay attention to, because all tides are lifted with, all boats are lifted with the tide. And when it's exact opposite as well. So when that tide goes away, a lot of your stocks are going to correct as well at the same time. And we'll talk about that more in the patrons, but it's so important to know what the market is doing, so you know why your stocks are actually starting to head to the downside as well. It's all about order flow, So what else can we get from this chart? Let's go down to the MACD. We made our bearish cross. We're headed down. We should test that 0 line at some point. So we'll be keeping our eye on that. So we have a lot of room. We're starting to accelerate on the histogram here. You see that big move, and I don't expect that to stop anytime soon. We actually came down underneath the 50, which usually is some sort of support here. And we do expect to get down to the sold. And I do believe if this is a wave 4, we should get really oversold and create some sort of divergence before moving back to the upside. So a lot of room still to head to the downside. Just to hit 30, we could hit the 20 into the 20s for the RSI. And let's just go down to the 65, see if we can see anything else for this week coming up, if we can identify what's happening on a lower time frame. You always want to look on these multiple time frames just to see what's going on underneath the hood. So we had our ascended triangle, fake break, came down, and I want to start putting my counts in here. I didn't do that on my own, but notice that we had this impulsive wave move down. That would be our wave 1. So I'll do it as we're talking here. So a 5-wave move down, and then a corrective wave up, which would be a 3-wave move, right into that golden zone, the 618 retracement, which is perfect. That's a perfect setup. And then we gap down. So let's put a little gap down area. We're going to talk about gaps in for our patrons. It's very important to keep an eye on these gaps. They are very telling, and they are used as support and resistance as well. So right at the opening, it was a gap and go. There was no retesting or making any wicks up. It just started to really accelerate to the downside. So that would that would let us know that this is a wave 3. So 1, 2, 3, and I really think this could be a 3, but what I really think is happening, and I'm going to move these out of the way so I can use them later. I really think this is going to be a 1, 2, and if we have a move up starting Monday, a gap up or some sort of move up, I do think it's going to be a 1, 2, 1, 2, because this isn't a big enough 1, 2 to take us really down for an impulsive move. So in order for us to get way down into the lower 4,000s here on the SPX, we'll probably need to see a 1, 2, 1, 2, and a 1, 2 is a really small one before we start to accelerate much faster into this into this really minor wave 3 headed down. Okay, so when you get those 1, 2, 1, 2s, that's probably where we're going to hit this this trend line. Let me adjust it just a little bit. Right, so we just tag those all those little wicks down here, these points right here. So when this price comes down here, it's at the 200 moving average right now, but if it seems to maybe gap down and then starts to move its way up here, it should be a corrective move, 3-wave move up, and that would give us our 1, 2, 1, 2. So that's what I'm kind of looking for, but don't just project that this could easily be a 1, 2, and 3 and just continue. The moves can be really small and just then rapidly move down there. We'll have to see what happens overnight in the ES because this could just keep gapping down. It could gap down over all of this stuff. Okay, so let's go ahead and go over to the VX. This is VIX futures. And we mentioned in the past that the VIX futures, that VIX was in contango. You know, what does that mean? That just means that the expirations, the closer expiration dates are, underneath, and price are lower price than the later dates. So if you go underneath the trade tab, you can see, and close this out. Sorry, everything's getting a little slow here. Okay, close those out and go to the VIX. All right, getting a little slow here. So yeah, if you look at the near dates here, we're active here in this date for the December. We're at obviously 2590 here, and if you go to the January, we're still at a higher VIX, you know, so it still says there's more fear out there, and this means that we're at the contango, and what we're looking for is this to actually switch around. And if we really get the move that we're looking for to the downside, in this case, in the upside for the VIX, we should rapidly increase. The VIX should shoot up, surpass the the Januaries and much later dated ones, and we should really really be moving down in the SPY and accelerating, and that will bring us into a backwardation to where we know that we're really getting the move that we're looking for. And then when that starts to even out and starts to level off, then I think we'll be looking for that reversal back to the upside on the market. So right near, looking at the VIX, we have our wedge that we're breaking out of. Just a huge move on Friday. It was a half day and just such a massive move. We're breaking out of the wedge. And so we're right at a resistance. I could put a line here. So let me actually just move this one, because we're kind of done with that that support at this point. And we're kind of looking at this. So this is our next spot that we have to get over here on the VIX for the market to continue down to lower prices. And then we have our next spot that we've been looking for at the 36 area. And at that point, we should just be massively moving down on the SPY, QQQ, IWM, all of them. They're all going to be hit together. So for the market to move like this and correct on the downside, everything's going to be moving together. You're not going to be able to hide in different different indices, and maybe some will move faster than others on days, but ultimately this is everything's going to move together. So that's what we're looking for on the VIX. Let's go over to the SPY, and quite frankly, if we get over this 36 area, I think we might be really into that bear market scenario, much deeper dip than what we were thinking about for the megaphone. I think there'd be much different scenario if we start breaking this 36 area. Then we're talking about reaching all-time highs here at the 80, or at least near 52-week highs. SPY. So we had a half day on Friday, and that didn't change anything for the volume. It didn't stop the volume from lift off, and right here it's massive volume into the day. If the day would have actually finished off, we would have probably been into a volume node, something more like this. Just a massive amount. So this is a great confirmation for the move here on the SPY, and it just kind of lets us know that we should be bearish until proven otherwise. Let me go ahead and put this gap in here. And so we'll continue to look at the volume. If it starts to actually accelerate, which is a good chance if we have another down move tomorrow. We have this support here, but we'll see what happens. And if volume continues to increase, and we know that we're in this much bigger move than people think. There's a lot of bulls that are out here still trying to buy the dip, and not sure that this is going to work this time. So just wanted to show the volume confirmation on there, and then we'll just end off with the for the free video with the SPX and the options expected move that we do each and every week. We like to look at this as a playing field for the week. If you look right here, you have the options expected move. We're right in the 50-60 range throughout this ascending triangle right here. And that just kind of lets us know that we have either 60 points to the upside, 60 points to the downside, no bias. We tag the bottom. And most of the time you tag the bottom or top. Throughout this, we're tagging the top the whole time, tagging the top, exceeding the top. And then what it shows is like we stay right into that range. And we did that, which just gives us kind of a visual that we're consolidating, that we're moving sideways. It's not pressing to the upside. It's not pressing to the downside. Now, this week, last week, we pushed underneath the expected move quite tremendously. So now it's showing that we're pushing through that field. We're pushing through the sidelines to the downside. So now you see our expected move has extremely it's like tripled. We start off the week here, and we are expected to move 154 points to the upside, 154 points to the downside. That's a massive move that we expect, but we should stay within this range. And I do think that we may have some sort of small move up here, and then reach the bottom side of this move. That's kind of what I'm looking at. I know that's projecting, but we are bearish, and we're gonna we're going to continue to be until we're proven otherwise. So that's all I want to show you. If you want a video on options expected move, I have one on the YouTube's free video. Check it out. I'll link it on this. I'll tag it above here. So thanks for joining us here at this weekend edition. I know it's a long video, but there's a lot of information out there. So if you're a Patreon, stick around.